All right, welcome everybody. Today is one of our kind of shorter version webinars where we're going to hit a specific topic. And so today is the basics of the Roth IRA discussion. My name is Sean McKay, and we're with American IRA, which is a self-directed IRA and 401k provider. So at American IRA, we are the record keeper for retirement accounts. And so our clients make a variety of investments from stocks and bonds and mutual funds to what are considered alternative assets. So that will be discussed a little bit at the end of the presentation. So today we're going to again talk about the fundamentals of the Roth IRA, who can establish one, who's eligible to fund a Roth IRA. We'll also talk about some of the advantages and disadvantages of the account, as well as kind of how they compare to the traditional IRAs, which for many of us, we're going to be making the decision between whether we want a Roth IRA or we want a traditional IRA. So again, today is just a very basic discussion about Roths. We'll put out another piece of content, which is a more kind of advanced discussion. We'll get a little bit more technical with the Roth IRAs. And then at the end, again, we'll kind of wrap up a brief discussion with the types of investments your Roth IRA can make. And you'll be actually a little bit surprised, many of you, in terms of the types of investments your Roths can make. So again, it's not just stocks, bonds, mutual funds, and index funds. So as we talk about the eligibility for a Roth IRA, the first thing to understand is that in order to establish your Roth IRA, you're typically going to be either a US citizen, have a passport, or you're currently living and working in the US in order to be able to establish one. The other part of the equation there is that you're going to only be able to fund that account, put money into that account, if you have some sort of earned income. So usually that's W-2 or 1099 income. So keep in mind, for those of you that might be drawing Social Security as your only form of income, that unfortunately does not count, nor does distributions from a retirement account like a 401k, traditional IRA, et cetera, that you might be currently drawing from as well. So it needs to be earned income to be able to put money into that account. And so the contributions, the max contribution each year as of 2021 is for individuals under 50 years old, you can put up to $6,000 into this account, assuming you have at least that much in earned income. For individuals 50 plus years old, you can actually put $7,000 into a Roth IRA. Now, there is a income restriction. So essentially, as you look at the table here with the income, you can make up to, if you're a single filer on your tax return, so essentially you're not married and you're not married filing jointly. If you're just a single filer, you can make up to $125,000 and essentially make a full contribution to your Roth. Married filing jointly, so as a family, essentially you can have income up to $198,000 to be able to make a full contribution. And as you can see here visually on the screen, there's kind of what's called a phase out period, where after a certain amount, you can't make any contribution to this Roth IRA. So that's a MAGI number. So that's the modified adjusted gross income. So there's a little bit of a calculation that your tax preparer can help you with to identify. It's essentially going to give you a little bit more buffer than just your gross income will for this discussion. So as far as the advantages for a Roth IRA, the Roth is a very powerful vehicle, and mostly because you're going to have the potential to get what's called tax-free growth with your Roth IRA. And so what that means is that assuming you have the account established for 5 years and you're 59 and a half years old when you start to pull money from your retirement account, your Roth IRA, you'll be able to pull the money out and not pay taxes when you distribute funds to yourself. So for example, if you at 60 years old or at some time later pull out $10,000, you want to go on a trip, you want to just simply pay for some of your bills, you can take that $10,000 out, assuming the account was established 5 years and you're 59 and a half, that entire $10,000 comes to you. You don't have to pay taxes on that $10,000. So that tax-free growth is certainly very powerful. So you also have the ability to distribute money that you've contributed, what we'd call principal money to the account at any point in time without taxes or penalties. So again, we spoke about the $6,000. Let's say that you're under 50 years old. You've put $6,000 away, and let's say that it just stays stagnant in terms of the contribution limit for the next 10 years, which probably won't happen, but just for easy math. So after 10 years, you've put away $60,000 in contribution money. But let's say the value of your Roth IRA is $100,000. So in that scenario, if you ever had, let's just say, some significant issue in your life and you needed to get to money inside of your Roth for whatever reason, you could pull up to $60,000 that you've contributed to that account without taxes or penalties. So it gives you a little bit of a safety net there. This is kind of a way to think about it. Again, safety net, something you don't really want to go to unless you need to. Now, as far as the disadvantages for the Roth IRA, one thing that some people will need to kind of figure out if this makes sense for them in their life, what they're trying to accomplish, is that with pre-taxed accounts like the traditional IRA, depending upon your income limit, you may be able to get deductions on your tax return for money that you've contributed. So for example, if you're making $40,000 at your job and you make a $6,000 contribution to a traditional IRA, then in that scenario, your taxable consequence will be based on $34,000 of income. So you got your $40,000 minus your $6,000 traditional IRA contribution. So you'll pay a little bit less in taxes because it's as if you made $34,000, not $40,000. Conversely, with a Roth IRA, because the money grows tax-free, the government's not giving you essentially any incentive to put money into the account. They're not giving you a tax benefit by making that contribution, if that makes sense. And also, just keep in mind, really with the Roths and the traditional IRAs, you're going to have a lower contribution limit than you will with employer-sponsored plans like 401ks, 403bs, and thrift savings plans. So the amount is a bit less there. So if you compare the Roths and the traditionals, in many ways they're pretty similar with a couple of distinct differences there. So as far as the contribution limits go, so again, it's the same whether it's a Roth or a traditional, your $6,000 or your $7,000 max contribution for the year, assuming depending on whether you're under 50 years old or 50 years old plus. So same contribution limit there. Tax efficiency with your investments will also be the same. So whether you're selling a mutual fund or you're selling other assets like a piece of real estate, for example, the sale of that asset will give you the same tax efficiency. So it'll be tax deferred or tax free. So in most scenarios, there's no tax consequence for selling that asset. So all the money flows back to your traditional or your Roth IRA. Now, with the traditional IRA, I would give the edge in terms of a short-term tax benefit, because again, you might get to write off your contribution to your traditional IRA, depending upon your income limit. Conversely, with the Roth IRA, you do not get a short-term kind of in the same tax year benefit for monies that you put into that account. Now, as far as the long-term tax benefit, I definitely give the edge to a Roth IRA, because with the Roth, again, it's growing tax-free. So later on in life, when you're taking money out of your Roth IRA, that's a far better tax consequence or lack of tax consequence than a traditional IRA. So the example we used earlier with taking $10,000 out with the Roth, we've had that account established 5 years and we're 59 and a half when we take the money out, we get the entire $10,000. With the traditional IRA, if we take out that $10,000, that's considered taxable income. So we're only going to get to keep what's left after paying Uncle Sam the tax bill. So we don't know certainly what the tax bill will be when we retire. It could be 20%, 30%, 40, 50%. And so again, if it's, let's say, a 50% tax bracket, then of that $10,000, you only get to keep $5,000. And then lastly, as we mentioned earlier with the Roth IRA, you can actually do an early distribution of your contribution money or the principal that you've put into the account without any sort of penalty associated with it. And typically that's not going to be the case with the traditional IRA. So hopefully that kind of gives you a little bit of an understanding about the pros and cons there. And last but not least, is we look at the options for our Roth IRA. So again, most of us are familiar with using a Roth IRA to buy stocks, bonds, mutual funds. More and more people are buying index funds like an S&P 500 fund. Those can be great tools, but that's certainly not the complete list of what we can invest our retirement account in. So our retirement account can actually buy a piece of real estate. So it could buy a rental property in the city that you live in. The retirement account can hire a property manager to kind of lease up that property, oversee it, and take care of it. And then the income associated with that rental will actually flow back to your retirement account as the owner. It can also invest in privately held companies. So obviously the stock market, that's for publicly traded companies. If you know of someone starting a new business, you could actually invest in their business. Now we have other clients that are actually using their retirement accounts to be the bank and to lend money to other entrepreneurs, to people that are doing real estate deals, and essentially, again, act as the bank, being sometimes called a private lender for those investors. And that's also a way that we can utilize our Roth IRA. And for those of you that want to have exposure to, what are kind of stabilizing factors of asset classes or things that usually work in a contrary fashion to the stock market, such as precious metals. Usually when the stock market goes down, the price of gold and silver goes up. So you can invest in hard assets like gold and silver. You could invest in digital assets like cryptocurrencies, Bitcoin, Litecoin, Ethereum, et cetera, et cetera. So again, so many opportunities available to us with your Roth IRA. And especially if you're interested in really any of the items on the screen below the index funds. So from the real estate to private companies to being a lender to crypto, precious metals. Also, if you're looking for just additional content, so whether it's kind of the short form, like what we did today on the Roth IRA, or longer form where we look at investment strategies and what have you, definitely feel free to check out our YouTube channel. So that's American IRA LLC. And we have a significant amount of videos on there at this point. So hopefully there'll be some value in there for you. So again, I'm Sean McKay with American IRA. Thanks so much for joining us today. My email is Sean, SEAN, at AmericanIRA.com. Our website is AmericanIRA.com. And our office number is 828-257-4949.